you are quite bullish on tech per se lah. So what about your asset allocation? I mean, where do you park your
So a
money?
few examples that come to my mind is Adobe. So Adobe is a software,
Maybe.
software subscription as a service company. They do Photoshop and things like that. There's so many to choose from. So I just like to focus on things I understand and things that make sense to Warren me. Buffett's way of investing as well. So looking at businesses, how they compound their, so
Uh,
we're talking about AI now, they have the AI search
yeah,
as
Meta
well.
AI. Yeah,
Yeah.
cool. Very cool. Hey, Sudhan, glad to have you here today. How are you doing today?
Hi James, I'm good, I'm good. Thanks for having me. And it's been nice to see you after so long. And I just realized we're in the same house.
Yeah, same background.
Same background.
So to start off, right, do you want to give a quick introduction to the audience as to what you have been up to recently? I see that you have started your compounding debt, so maybe you can share a bit.
Yeah, sure. So, I mean, my journey started back in 2009 when I started investing. Before that, during my national service, I was like doing actually a lot of other things like forex, options, futures also. So I lost a bit of money there. I mean, during national service NS time, like a bit of a few $100, $1,000, a lot of money really. So I lost quite a bit at that point in time, and I realized that uh, looking at technical analysis doesn't make sense to me. Like I know people who have done very well in forex, looking at charts and things like that. But I realized that it's not for me. So I kind of learn about Warren Buffett's way of investing as well. So, looking at businesses, how they compound their growth, how they grow over the long term, looking at their prospects. So that made a lot of more sense. Like because I can visually like look at the companies, especially those listed in Singapore and things like that. So that made more sense, and I pivoted to more of like a value growth investing from 2009 onwards. And that's when I started investing. Was a great time to start when after the GFC recovery. Yeah, so I haven't looked back since then. Yeah, so what I'm doing now, I'm having my own blog, which is like the compoundingdebt.com. It's my own Substack where I publish articles on investing and making it simple for everyday people to learn about investing, start investing. I believe that everybody should actually start invest. Yeah, it's not only for the elite few or like those who are rich. Like every single person needs to invest because like putting money in the bank is like now earning next to nothing, even worse with inflation. So we should learn to grow our wealth, our money, by investing. Even if you are tracking the index, for example, a simplest way is like just buy the exchange fund or a low cost unit trust, for example. Yeah, so I think yeah, so I want to spread the word of investing and pay forward the knowledge that I've gained over the years. Yeah.
Mm, yeah. Okay, thanks for sharing. Yeah. Okay, so just now you mentioned you started off with TA, right? Forex and everything. So can you take us back to your first value growth stock, lah? After you have learned from Warren Buffett, right? So what was your very first stock and what do you learn from the experience?
So my very first stock I remember was actually Raffles Medical in Singapore. So I think it
Um,
was June 2009 I bought my first medical. Yeah, of course it was a good time to buy. Oh, I sold it uh after 3 months because
oh,
the stock was going up, and I know I calculated the intrinsic value to be X dollars, X number. And then so if once it reached intrinsic value like 3 4 months later, because the market was rallying at that point in time, right? So I actually sold off that stock. So it was like a huge mistake in the sense that the gains that even though I got gains, but I couldn't capture the more further upside from that company. It was a strong company, medical company. It's a wide mode. I mean, it's the largest practice in Singapore, private practice in Singapore,
um,
and things like that,
that
and very
happened
good
quite a
cash
long time
flow.
ago, lah.
Yeah, that was like 2009.
Oh,
Yeah, so that
2009. Right,
yeah,
right.
my first investment and my first mistake in a sense. Yeah, like selling a stock uh way too
Yeah.
early. So since that
Mm,
point in time, I learned to actually hold on to companies even though they may like seem undervalued. As long as the
mm,
business is still doing well, they're still generating cash flow, they still have a strong balance sheet, they're still growing the profits. I mean, it doesn't make sense to sell just to take profit. Yeah.
mm. Okay, okay, thanks. So you mentioned about the business model and things like that, right? What other characteristics do you look for in a particular stock?
Yeah, so when I invest in a company, I need to first understand the business. So make sure I know what they're doing. So I mean, there are so many companies out there in exchanges. So, I mean, there's so many to choose from. So I just like to focus on things I understand and things that make sense to me. So, for example, hospitals is a easy industry to understand for me. Like because I was previously from like the bio background, I was learning biology in school and things like that. So I love like
Oh,
this sector, healthcare. So
mm,
I mean, I understand it's like entirely different healthcare and biology, not like for like, but I could understand the sector. In general, I look at companies that I understand. So Warren Buffett calls it the circle of competence. Yeah.
mm,
So first understand the company, and yeah, look at how they make money. Like what's their business
mm,
model, and so in terms of their financial statements, look at their profits, their revenue, whether it's growing year on year over the long term. I look at least 10 years of history. So 10 years revenue growth, 10-year net profit growth. Looking at their profit margins, whether their net profit margin is like above 20%, for example. Gross margin is also high, above 40%. Of course, tech companies nowadays give you like gross margins of like 90, almost 100%. Yeah, so
mm,
so high margin shows that there's competitive advantage for the business, and uh, that the competitors cannot encroach into the territory of the business itself. Yeah, so
mm,
the things like that. So a balance sheet as well, like strong balance sheet, make sure they have a lot of cash, not more cash than debt. Even if they have debt, like make sure it's manageable to pay off the loans, because we never know what happens in the economy. Like any moment in time, there can be recession, and companies with a lot of debt, the banks will hand on their backs to pay them back, pay the banks back. So always have in good times or bad times, have always have strong balance sheet. Yeah, look out for that.
mm,
And another thing I look out for is cash flow. Make sure it's producing cash, because accounting profits doesn't mean it's cash in the bank, cash coming into the company. So cash flow is
mm,
always important, and make sure, yeah, it's operating sustainably. Yeah. So
mm,
in
mm,
general,
mm.
these are things I look out for, and of course the prospects, growth prospects, and things like that.
So I can see that you focus quite a lot on the financial performance of a particular stock, right?
Yeah, sure.
So can you think of any examples that right now fulfill these characteristics or criteria, and maybe you want to share a few of these companies?
Sure. So I'll focus more on the US markets, because that's where also I'm trying to focus more also. So a
Okay.
few examples that come to my mind is Adobe. So Adobe is a
Adobe.
software subscription as a service company. They do Photoshop and things like that.
And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel, and ring the bell so you get notified every time I release another stock analysis video. Hmm.
Yeah. So in terms of like competitive advantage, it has like the one of the biggest advantage ever, because a lot of people use all these softwares, Photoshop, Illustrator, things like that. And it's based on a subscription model. So they pay they so used to be they pay upfront like a huge cost. So Adobe
Hmm.
was pioneer in the SaaS business, SaaS, software as a service business. So they transitioned to that model, I think, back in 2012. And of course, when they transitioned, the revenue got hit, and then things didn't go well for the company for the short term. But over the long term, it proved to be a good decision, because now a lot of companies are going to the SaaS model, like pay 1 month, and then you pay monthly, instead of like paying one
Yeah.
off $1,000 monthly. You pay $10, for example. It's much easier on the pocket, and it's easier for the buyers
Hmm.
to be. Yeah, so it's churning a lot of money from their subscription service. And yeah, so that's one company I like, Adobe. Of course, it's not a recommendation, but something that I like.
Yeah.
And Alphabet, Meta, and things like that.
I forgot.
So these are some of the companies I like, because they have like, it's like a verb itself. Like, when you say you want to search for something, you don't say search in the search engine. You say Google for something. So things like
Yeah.
that. And Facebook, Meta, Instagram, they have like leading market share in WhatsApp. So yeah, I look for these kind of companies with a lot of cash, a lot of leeway to grow in different aspects. Now it's AI. I know you won't know what's
Hmm.
next. So, but I don't like invest based on trends. I just like invest based on the
Hmm.
company, the management, the growth prospects in general. and anything that comes in is like a bonus. Yeah.
Cool, cool. Thanks for sharing. So, talking about AI, right? So now the next question that I have is about the growth trends, last, kind of circular growth trends. What disruptive or futuristic technologies, right, and the related stocks are you keeping an eye on that you think can play out pretty well in future?
Okay, I think one I wouldn't dive into like immediate growth trends, but I think one general growth trend is basically tech. The tech industry. I think
Mm,
COVID has shown that tech is here to stay. I mean, when COVID happened, people were going all into tech, right? Like working from
mm,
home, all this remote working environment was made possible because of internet, because of tech. So I think the major trend I want to write on, I think is the internet. Yeah, so the tech, I would say. Uh, so I think that's here to stay. I mean, AI, of course, as I don't think AI is a fad. I think it's here to stay as well. I mean, it's really helping people do their jobs even better, more productively. And it's like when Excel started, Microsoft
mm,
Excel, people are thinking
mm,
about how it's going to disrupt industry and things like that. But I mean, of course, it lost some people. Some of the jobs were disrupted. For example, those who are doing manual data crunching, for example. But of
mm,
course, they also could upskill themselves and do more in using internet, using technology. Yeah, so they could
mm,
churn more Excel spreadsheets within the same time, so that their job got redesigned. So I think AI is going to help us to redesign our jobs, make us do work more efficiently, and I don't think AI is. Of course, I think it's going to be a world where AI plus humans. It's not going to be like AI taking over humans, because I think the human touch is still needed. I mean, when you see a doctor, you don't like want to see a robot, right? When you're asking
mm.
stuff like that.
Yeah,
Yeah, so
the
you still
medical
need a physical.
sector.
Yeah, so the medical sector is one example. You see the physical touch. I mean, even though you're doing this online, we can actually do this, by technology and stuff like that. But we still the human touch is needed, and there's even though
Mm,
we're not physically present, the human touch is still needed. We can use AI
mm.
to record my voice and say it out, but doesn't give the same effect. Yeah. So
Yeah, that'd be quite scary already. Yeah.
yeah. So I mean, it is like deep fakes are here, so it's scary. But of course, there's to every technology there's a negative thing. To everything there's negative and
Mm,
positive. So yeah, I think the positives are good for technology in general. So yeah, growth trends wise, I think just the online trend. I mean, um,
online
so
trends.
when you talk about online trend is like e-commerce, AI is one, fintech payments, everything's doing
Mm,
online. Yeah, so I think it's just this general online trend over the long term, because I think more and more companies will go online as well. I mean, like I mentioned COVID. So when COVID happened, a lot of companies will push to go online. Yeah, it's small businesses,
mm,
and in fact, when they go online, they are better, right? Like they can serve more customers. They don't have to physically be the store, but when the shops are closed, they can still serve customers through their website. So I think, yeah, this trend I think it's here to stay.
you are quite bullish on tech per se lah. So what about your asset allocation? I mean, where do you park your money? Is it like maybe huge chunk inside the tech industry or things like that? Can you share more? Yeah.
Yeah, so now I'm actually trying to do more of a passive way of investing. So yeah, all the while I've
Mm,
been a lot into active, right? So now I got family, so and I'm also thinking of spending more time with them and growing my own things. So I'm
mm,
also trying to do more into the ETF route. So being more passive about it, so that I don't have to monitor the company's earnings call, looking at reports. No, I understand, like all
mm,
these companies will be Alphabet and things like that. They don't need a lot of monitoring, but also
mm,
I'm someone who wants to like read up, learn about it as well. What are you doing almost every quarter? Not every quarter, every half yearly, yeah, or
mm,
yearly at least. So so yeah, these things take time, and I realize that doing it passively and save and freeing up the time is more important for me at this point in time. So yeah, I may go back into more of a more active investment maybe, but I'm trying to move more in the passive way of investing through ETFs, low cost unit trust, and things like that. So asset
mm.
allocation wise, still mainly in active stocks, but I'm slowly trying to move it to more passive way.
More
Yeah.
passive. So when you talk about ETFs, right, do you invest in the whole market or do you go into a particular industry like maybe cybersecurity or AI per se?
So for ETFs there are a lot of options as well. So
Yeah.
there's like you mentioned, like the world index, you can buy the world index or you can go into sector ETFs. So
Uh,
yeah, so for me generally I haven't done the more of the core satellite kind of approach. So my satellite is basically I want to be more of like the individual stocks. My core I want to make it more of like the uh passive ETFs. I mean the world ETFs. Yeah, more of like the
World ETFs.
you know yeah. So
Yeah, the
world ETFs,
indices lah. Like S&P
correct the world.
500 index kind of. Yeah.
Yeah, so
Understand.
even broader than that, like the world, those tracking the world FTSE
Oh,
kind
the
of
MSCI World
all
Index.
MSCI FTSE kind of thing. So I mean, I want
Okay,
to
okay.
be even more broadly diversified. So there's like they have 1,000 plus stocks or even more than that.
Mm,
Um, so within that,
mm.
allocate more to the world index and then a smaller percentage, for example, to the S&P 500 and also to
Oh, okay.
emerging markets as well. So I mean, this is the thinking I have currently. Yeah. So yeah.
Yeah. Cool, cool. Yeah, thanks. For me myself, I also slowly transferring to the index funds because I also have family. Just takes a lot of time to do all this research. Actually, for the next question is quite close to my heart. So, what are some of the tools, right, investing tools for you to stay up to date on the market news and company analysis?
Okay, so for market news, what I do is basically read newspaper lah. I mean, I used to actually read newspaper every day, but like you mentioned again, like the time, right? Time is essence for us. So now how I consume news is basically through WhatsApp. So okay, one thing is like okay, two ways like in WhatsApp itself. So one is through like family groups or groups that I have with friends. So when it's very
Mm.
important, I feel that if it's really important news, it will come to me through WhatsApp. So people know talking about it in the
Oh,
groups. So
okay.
I try not to consume a lot of news every day, because it's also like a lot of negative stuff in the news. Yeah, try to like move away from that. So if you want to
Mm.
consume news, it's like more like inbound kind of news to me. So I let people tell me. Of course, it can be outdated because of that. I mean, sometimes I don't even know
Mm.
like what's happening in the world, but it's okay. Uh, yeah,
Okay.
so that's one way. Through people telling me through group chats. So, but another way, one good
Cool.
avenue now WhatsApp has is the channels. So they started the channels,
All the
WhatsApp
channels.
channels.
Yeah.
Yeah,
Right.
so I went subscribe to the Business Times channel and Straits Times and things like that. So at least like here and there when I got time, I just scroll through. I don't have to read the whole like 50 plus pages of the paper. I just like look at headlines and things that interest me and just read there. Yeah, so
Mm.
that's how I consume news now. Of course, there are like general news that when I Google something, then I see the Google itself, the news for that particular topic. So that's how I also consume news. In terms of tools, yeah, I used to use Share Investor a lot. Yeah, so for
Oh,
Singapore
sure.
stocks, yeah, so for Singapore stocks, to research and things like that. So now I use the for international stocks. I also use Morningstar. I mean, they have the 5 year now, still free, I think. And my broker as well, they provide very good coverage. So they have coverage from Thomson Reuters, like the data from them. So I use DBS because
Oh,
yeah,
okay.
so DBS because of that. I think even FSM1 in Singapore, IFAS they had that as well, like the historical data. So I use that.
Mm.
Another tool that people can look at is this company called Ticker. This website TIKR is another like data
Oh,
aggregator. Yeah,
mm.
so for users to use. I think the first 5 years is free, but if you want like 10 years, 5 years or more, like 10 years, you need to pay. And
Of
if you want
data
like
lah.
of data, yeah, and if you want
Yeah.
like international stocks, different exchanges, I think you have to pay as well. Yeah.
Mm, wow. Wow, thanks for all the tools that you share. I mean, the WhatsApp one is quite a surprising one for me lah.
Okay.
Because basically I always go to the website directly. I had never thought about WhatsApp myself. Okay,
Oh, for the channel, is
so
it?
yeah, the channels. Yeah,
Yeah,
I mean, I
actually,
haven't
so I
checked
think
it
the
out.
idea I think you should. So the idea was basically, I think Telegram you could subscribe to channels right previously. So I think then the WhatsApp created that the Telegram kind of few channels thing. So because I don't really use Telegram, so I'm more into WhatsApp. So it's good that
Yeah,
last time
same.
I had to go to Telegram and then I had to go to WhatsApp to like get the Business Times or Straits Times news. So now with WhatsApp, I just everything's there. So I just use WhatsApp. Yeah.
Okay. Wow, the Facebook has this mode already. I mean, for WhatsApp.
Yeah. And
Okay.
they have AI as well. We're
Uh,
talking about AI now. They have the AI search
yeah,
as
Meta
well.
AI. Yeah,
Yeah.
cool. Very cool.
Yeah.
Okay. So, last question that I have. So, what advice would you give to the audience or your younger self if, let's say, you are starting out in investing again?
I think the advice I would give to the readers, I mean the audience, and also to my younger self would be the same. Basically, is to gain as much knowledge. Yeah. So, I mean, when you're young, you have the time to gain the knowledge, and before you start investing, you don't have to rush into it. And because you're young, also, the power is in your favor. The power of compounding, because with
Mm,
compound interest, right? Basically, you need a long time frame to reap the benefits of investing. So the earlier you start investing, the better it is, because for sure you'll make mistakes in this investing journey. So
mm,
so when you make mistakes, if you start earlier, the mistakes don't affect you as much when you start like at 50 years old or even later. So you make a lot of mistakes at the start, and then you learn from it, and then you improve upon it, and then you can won't be so costly compared to when you start much later. So I would say to always gain the knowledge, through channels like
mm.
James Yo's YouTube channel, learn as much as you can.
Thank
Then
you
yeah,
for
gain the
yours also,
knowledge and
compounding that.
yeah, yeah, thanks. So yeah, gain the knowledge and start early. Yeah.
Start early.
And
Yeah.
and, 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 and and don't be afraid to make mistakes. Don't be afraid to yeah, make mistakes. It's not a failure. When you make mistakes, it's not you to fail. It's that you're learning.
Mm,
Yeah, every time we
mm.
fail, I mean, you make mistake, you learn from it, and you improve yourself. Yeah.
Yeah. Okay, thank you, Sudan. For our readers, do check out his website, thecompoundingdebt.com. All right. So we will catch up again, Sudan. Yeah, hopefully it's physically lah. Yeah.
Yep.
Thanks for your
Yes.
time.
Thank you, James, and
Thank
thanks for
you.
having me. Okay, bye bye.
Okay. Thank you. Bye bye. Before we end off, if you find the video helpful, I will appreciate it if you can help me to tap the like button and share the video so more people get to know about this video. Next up, don't forget to check out this video over here if you have another few minutes to spare. And I will see you next time. Thanks for watching and ciao.